Two of the business lines of credit creators are still telling you to apply for in 2026 don't exist anymore. Not harder to get, not tighten up, gone. Amex wound down their cabbage line. Fund and Circle sold their entire U.S. business to a different company in 2024. And most of the credit advice out there hasn't updated. So today, I'm walking you through what's actually open, who's actually taking applications, and the qualification gate you need to hit before any of it matters. Hey, if you're new here, I'm Flo. I run the Credit to Capital Blueprint, where we walk through what actually works in 2026. Not what worked 3 years ago and got copy-pasted onto YouTube ever since. If you're new here, hit subscribe and turn on notifications so you don't miss the next video when we get into the credit app spree and what $100,000 of approved funding actually looks like. Today's video is the BLOC playbook. Let's get into it. Let me walk you through this. A business line of credit, BLOC for short, works like a business credit card. You get approved for a limit. You only pay interest on what you draw. You pay it down, the limit refills. Different from a term loan where you get one lump sum and pay it back on a schedule. Here's the part most people miss. When a lender writes you a BLOC, they almost always file what's called a UCC1. UCC stands for Uniform Commercial Code. The UCC1 is a lien on your business assets, recorded in your state's filing system, visible to every other lender that pulls your business credit report. Think of it like a mortgage on your business. If you default, the lender that filed the UCC1 gets paid first. Other lenders see that filing and think two things. This business already has a creditor with first dibs, and this business might be over leveraged. From my understanding, the SBA almost always takes a UCC position. It's baked into their lending model. Other lenders file UCCs too, mostly when your business is under 2 years old, when your revenue is on the lower side, or when you don't have established business credit yet. Here's the strategic piece. Your first BLOC sets up your second BLOC. If your first BLOC came with a UCC filing, your second lender sees that lien and gets cautious. They want to know if you are overextended. They want to see stronger financials. The way I look at it, the UCC question is one you want to answer intentionally, not just accept whatever the first lender offers you. So before we get into who's open and who's not, that's the structural piece to hold onto. BLOCs are flexible, UCCs are sticky. Here's something I want you to lock in because no one teaches this, and it's the single biggest reason people get denied for BLOCs. BLOCs and PLOCs, personal lines of credit, are underwritten completely differently. A PLOC is profile based. The lender looks at your FICO score, your debt to income, your credit history, your inquiries. Standard personal credit underwriting. A BLOC is revenue based. The lender still pulls your personal credit, but the engine of the decision is your business's documented monthly revenue and the bank statement history. They're scoring your cash flow, not your FICO. What that means practically, if you've been focused only on building your credit score, you might still get denied for a BLOC because your business deposits don't tell the story the lender needs. The fintech BLOCs especially, they want to see consistent revenue hitting your business account month after month. Lumpy or thin deposits get denied even with great credit. The fix is to grow documented deposits in parallel with credit. Move your business revenue through your business bank account. Build a 90-day, 180-day, and 12-month deposit history that a BLOC underwriter can see and feel comfortable with. Keep that in mind as we go through who's open. The product is built around the revenue side of your profile. Let's talk about the SBA path first, because it's the most credible BLOC channel and most people misunderstand the requirements. The SBA, Small Business Administration, runs two BLOC products you care about, the 7A and the SBA Express. The SBA 7A goes up to $5 million. Repayment terms run up to 10 years for working capital and up to 25 years for real estate. Interest rates are variable, usually prime plus 2.25% to 4.75%. Larger loans get the lower spread. Smaller loans pay more. Here's the part the source material gets wrong. The SBA doesn't set a minimum credit score. That gets repeated everywhere. You need 720 FICO for SBA, but the SBA itself has no published number. What's true is that most participating banks want to see 650 to 680 at the floor for the 7A. Higher scores get better rates and faster decisions. The 720 number that floats around online is one bank's preference, not an SBA rule. The SBA Express is the faster product, up to $500,000. That's the current cap, raised from the old $350,000 limit. SBA guarantees 50%. Decision comes back in about 36 hours. The credit floor is 650 FICO typical. One thing to flag on both products. SBA requires a personal guarantee from any owner with 20% or more of the business. That's not negotiable. If you're forming an LLC thinking it shields you from the SBA personal liability, it doesn't. The PG is built in. And yes, the SBA almost always takes the UCC 1 position. That's part of the SBA model. Real quick, if you're getting value from this, drop a comment with the word BLOC, and I'll send you the qualification checklist I put together for this video. It walks through the exact gate you need to hit before applying. All right, back to the lender map. Now the fintech side. This is where the outdated content really shows up. Two of the fintech BLOCs you've heard recommended over and over aren't open to new U.S. applicants anymore. Amex, business line of credit. This was cabbage before Amex bought them. As of 2026, that product isn't broadly available to new applicants. If you already have an Amex business account, check your Amex Business Blueprint dashboard for pre-approved offers. Those still exist, but you can't walk in cold and apply for the Amex BLOC the way you could in 2022 or 2023. Don't plan around it. Funding Circle, same story, different mechanism. Funding Circle sold their entire U.S. business to a company called iBusiness Funding in March 2024. Funding Circle still operates in the UK, but in the United States, the brand is gone. iBusiness Funding now runs that book. And here's the important part. They don't offer a line of credit anymore. They offer SBA 7A referrals and term loans up to $500,000. So if you've heard creators say apply to Funding Circle for a BLOC, that path doesn't exist as a BLOC anymore. The fintech BLOC that's still open and still taking new applicants is Bluevine. Bluevine wants 12 months in business. Note that. The old 6-month threshold is outdated. They want $10,000 per month in revenue. Personal FICO floor is 625. Credit limits go up to $250,000. The lowest published APR is around 7.8%, with most approvals landed in the 8 to 16% range based on your full profile. Polls, personal credit on Experian, plus business credit. So the practical fintech BLOC list in 2026 is short. Blue Vine. That's the one to focus on if you fit the gate. Here's a misconception I want to clear up, because last video we talked about LLCs, and the LLC conversation can lead people to a wrong conclusion about business credit. Forming an LLC, getting an EIN, building separate business credit, none of that eliminates the personal credit pull on a BLOC. Years 1 through 5 of any business, every BLOC underwriter is pulling your personal credit. Wells Fargo wants 680 plus. Bank of America wants 700 plus. The SBA participating banks want 650 to 680. Blue Vine wants 625. And every one of them requires a personal guarantee on the BLOC, regardless of how clean your business credit profile is. Business credit and personal credit are connected on the underwriting side, even when they're separate on the reporting side. Reporting does not equal underwriting. Just because your net 30 vendor accounts don't hit your personal credit report doesn't mean the bank ignores your personal credit when they're deciding on your BLOC. They don't. The way I look at it, the stage 4 BLOC entry gate looks like this. You need 4 things in place at the same time. 1, a business bank rating in the low 5 range, meaning $10,000 to $39,000 average daily balance on a 90-day window. 2, at least 2 business credit cards reported to a business bureau. 3 to 4 vendor trade lines reporting, the kind we covered in past weeks. 4, personal FICO still at 720 or above, even with all the business credit work you've done. All 4, not 3 out of 4. That's a gate. And if you're not at all 4, the work in front of you isn't applying for a BLOC. It's hitting the gate first. That's the checklist I'm linking in the description. It walks through where you are right now and what's still left to build. Last piece, when you do hit the gate and you're ready to apply, here's a framework I use. Step 1, know your position, credit score, time in business, monthly revenue, existing debt. Step 2, clarify the goal, building credit history, cash flow access, or stacking for a bigger pool. Step 3, identify lenders that fit your position and goal. Step 4, evaluate the UCC question on every single lender. Will they file? What does it mean for your second BLOC? Step 5, compare APR, limit, repayment terms, and closing timeline before you commit. And 3 mistakes I see business owners make every week. 1, applying to multiple BLOCs simultaneously. Every application is a hard inquiry. Space them out by 30 to 60 days. 2, ignoring the UCC question. Ask the lender directly. 3, taking the first offer. Pre-qualify with 2 to 3 lenders before committing. If this was helpful, comment BLOC below and I'll send a qualification checklist. It's the stage 4 gate I'll walk through, laid out as a printable. Subscribe so you don't miss next week on the Credit App Spree. And remember, this content is for educational purposes only. Always do your own research before making any financial decisions. See you next week.